Welcome back to Unday Radar Talks. Nvidia. Nvidia stock has risen for 3 consecutive trading days, with an average daily increase of more than 3%. However, the trading volume in the last 3 trading days has not increased significantly. The stock plummeted nearly 4% on May 1st, with a trading volume of 56 million shares and a turnover rate of 2.3%. From May 2nd to 6th, the stock's daily trading volume was nearly 40 million shares, with a turnover rate of about 1.5%. The trend shows that the stock is trying to break through the previous position of $974, but it is obvious that there is great resistance at this position, and the profit rate of the bottom position is already very high. We can see from the Nvidia 10-minute chart that the stock had a large number of selling and buying orders on May 1st, and then its stock price rose strongly. The stock price rose sharply at the opening on May 6th. A large number of orders were concentrated in the first hour, and there was also a large trading volume in the late trading. Nvidia's performance on the 6th led to strong gains in the semiconductor sector, causing the S&P 500 index to lead Dow Jones. Nvidia announced its latest quarterly earnings report after the market closed on May 22nd. Net capital inflows from the last 3 transactions in Nvidia stock totaled $2 billion. On May 6th, there was a net inflow of nearly $1 billion. On May 1st, the stock price fell by nearly 4%, with a net capital outflow of $1 billion. Now that capital is flowing back again, it proves that the stock price has a strong desire to rise. But at the same time, we must also be wary of capital taking advantage of the current high price to withdraw capital, causing prices to fall. We see that as of May 6th, the profit margin on Nvidia stock positions has reached as high as 95%. But what is interesting is that positions below $760 are not too concentrated. Most positions are concentrated at $880. In this case, the selling pressure is not particularly strong, but we need to be alert for a price pullback. Data shows $945 is a resistance level. It will not be easy for Nvidia stock price to reach $970 for the 3rd time this year. Further rises will lead to further profit-taking selling. I think that when the stock price reaches $740, it will be a strong resistance. Based on the current price calculation, there is not much room for profit. It is not recommended to buy at this time. Apple announced its latest quarterly financial report on May 2nd, and the stock price rose nearly 6% on May 3rd, with 163 million shares traded and a turnover rate of 1.07%. On May 6th, the stock price fell by 0.9%, with 78 million shares traded, and the turnover rate dropped to 0.51%. At present, the stock price has returned to the position in February this year, but it immediately pulled back after rising high, and $187 became a resistance position. Selling pressure on the stock seemed to be weakening on May 6th, but the stock price may still have room to drop further. The current level of $181.71 does not look like a strong support level. We can see from the 15-minute chart that after the market opened on May 3rd, the stock price dropped rapidly from the high, and the trading volume was concentrated within 2 hours after the market opened. Then the stock price continued to fall. Some investors have realized that the stock price will correct downwards. But where is the support? The sharp rise in Apple's stock price on May 3rd brought a net capital inflow of $2.5 billion and another net inflow of $700 million on May 6th, although the stock price fell that day. We see that since April 23rd, the stock's capital has been a continuous process of net inflows, regardless of whether the price is rising or falling. Some investors were betting that Apple would surge as a result of its strong quarterly results, and it appears they were right. However, the net capital inflow after the surge may represent a reverse capital outflow, and downward price adjustments may continue. The position cost distribution data of Apple stock as of May 6 shows that the current position profit rate of the stock is 52%, and the selling pressure is average. Most positions are concentrated above and below the current price of $181. I believe that over the next few trading days, positions above and below should converge towards the current price area, which means that the stock price will find a strong support level in this area. So looking back at Apple stock, the current price does not seem to be a strong support position. The stock price is likely to drop to $178 and gather the strength of the bulls to start a rebound. Alphabet. After Alphabet announced its latest quarterly financial report on April 25th, its stock price hit a record high on April 26th, reaching a price of $176, but then began to fall rapidly. 57 million shares were traded that day, with a turnover rate of 0.51%. But in the following 2 trading days, its stock price fell by about 5%. A large amount of profit-taking has accumulated below a record high price, and such a sharp rise is certainly a good opportunity for short sellers to sell heavily. However, on May 1st, the stock price ended its downward trend and began to rise slightly. It seems that the power of the bulls is still strong. Let's take a look at the last 7 trading days through the 15-minute chart. After the stock price rose and fell on April 26th, the stock price dipped to $165 twice, but was immediately pulled back. There should be a strong support position here. It is worth noting that a large number of orders were concentrated at the 2 lower positions of points A and B, but the final stock price rose, which is a good signal. We saw that after Alphabet stock surged on April 26th, the daily capital trend was net outflows, but the price continued to rise. It is worth noting that the stock price fell 3% on April 29th, with a net capital outflow of $700 million, but the closing price of the stock on the last trading day was higher than the closing price of $167.90 on April 29th. So this may be a reverse net inflow of capital. This is also a positive sign. Let's take a look at the position cost distribution of the stock as of May 6th. Data shows that the current position profit rate is 97%, and the selling pressure is relatively strong. We see a large concentration of positions below $145, and the selling of these positions will put pressure on the stock price to continue rising. We also see data showing resistance at $173. However, this does not mean that the stock price will fall. If the bottom position moves upward and is concentrated in the price record high area, then the stock price may rise slightly or move sideways. I think Alphabet stock could continue to rise and reach resistance at $176 again, with about 4% upside from current prices. That's it. This is my analysis. If you have different ideas, please leave a message below. Thank you for watching. If you like my video, please give a thumbs up and click the subscribe button. See you in the next video.